Welcome back, everyone, to another video where I'll be going over and breaking down my gold trade today. As we are all aware as traders that the price action that we're now seeing for the last couple of weeks, I would say this week and last week, has been something else. And we've had to pull all stops, so to speak, to be able to navigate these conditions in the market. And it has, I would say, all this is being contributed to by that war that is happening in the Middle East, which we do expect to affect stores of value such as the metals and cryptocurrency units. And of course, based on the region, we know that crude oil will be definitely affected by what is happening in that area. And as such, even the biggest of experts as it relates to trading uh, have found it difficult throughout this week, especially to be able to decipher the market direction. And the truth is, I've been patiently waiting to see what or what will come of price action in terms of presenting a best trade setup. And today was the only day so far this week that has presented anything that piqued my interest and had me press that button to take a trade, right? So I'll break that down in a bit. But just looking at what's happening here, if you remember, I would have said to you that you can use the Australian dollar to trade gold and vice versa. As you see, it's a part of my trad for uh, sequential SMT comparison. And if we look at, we've now started the new day, but we're still, today is still Thursday. So that's on in my time zone. So, but we know that the new day starts in the charts as at 6 p.m. So when I refer to yesterday, I'm really speaking of Wednesday. So if we look at Wednesday's candle on gold and today's Thursday's candle on gold, failed to take Wednesday's high. There's a fair value gap there. And if we look at it on the Australian dollar, I'll explain why the Australian dollar is um, positively correlated to the gold. Remember, Australia is one of the biggest producers of gold. It's a big contributor to their GDP, and as such, they trade in tandem with each other. Where one goes, the other will follow, right? So it's a great asset along with silver to use to tell you what gold will do. Right. So if we look at silver, so we see on the Australian dollar, there was no gap, but the day, which is today, traded higher to Wednesday's higher high. So if we look at silver, silver also failed to take Wednesday's high on Thursday, right? So we had a sequential SMT where that cracking correlation would have already indicated that prices should be going lower. All right, so that was the first signal for me. The next thing was, I believe there was a 4060. Let me make sure. There was a precision swing point. Where was that? Find it. I'm just going back over exactly what I saw and why I took the trade. I believe this is it. So the 2 o'clock candle was a precision swing point, and that was in line with our high that failed to fill the gap on gold. So right there, what's happening here? Oh, I thought I had a box. My bad. Where is my, right here? So I should have had a rectangle here. That's my precision swing point, right? We had a up close candle here, while we had a down close candle here, and I believe on the Aussie dollar it was a down close candle as well, similar to gold. So first indication, I will show you my entry. My entry was on the 15-minute time frame inside of the consolidation here. And I'll tell you why again. There was another swing point, precision swing point that was created. Where was that? Right there. So this 4 a.m. candle. So all of this would have happened before coming to the charts, right? So I came to the chart sometime after 7 or after 8, and let's go here. So that was another confirmation or confluence. The next thing that happened was, all right, so I also tend to watch how the 7 o'clock and the 8 o'clock candle opens in relation to the 7 o'clock candle, and how the 9 o'clock candle opens in relation to the 8 o'clock candle. So that's what these are. Um, so I just mark each hour as it comes, and if I get any cracking correlation there, would have been further confluence. So let me just show you if I can where my entry was. Let me just have a quick look here. I don't want to be this to be too long either, but I don't want to be telling you what's not so. Alright, so entry was actually on the 5 minute time frame. So, and my entry was right inside the 7 o'clock candle, as I would have stated before. All right, so then another thing that I would have applied to what's happening here would have been, because as I said, even though price has been showing you what it wants to be doing, it tends to have been doing the opposite of what we thought it could be doing throughout the week. And so everybody was expecting gold to be going to 6,000. Instead, gold reversed at 5,000. What was that? 300 or further, or 600, I believe, and has not looked back since. So remember that daily cracking correlation, and remember the precision swing point on the 4 hour time frame. The next thing I looked for was the dealing range. So I was pulling all stops today, to be honest. And we were inside of, what range was it? I believe this range, because price had not taken that high as yet. So this would have been the highest high and the lowest low. Both would have taken sell side and buy side liquidity, right? So this is another thing that you can add as another stop that you can pull. So where were we inside of the dealing range? We were in above the 50% mark. So we're in premium. So that added confidence to the sales. And what else was here? My entry was in the time candle. Was this? Was, if I'm able to add the screenshot on the video, if not, I'll add it as a post in the community chat on YouTube. So we were above the 50% line. It's another confidence I use. And I believe there was a monthly open as another target below. Remember, I used time to give me my entries and exits as well. So that's another thing. So my entry was in the that candle right here. So the 740 candle. We already had a change in state of delivery after price swept these highs. This would have been an inverse fair value gap right here. And so after price touched that, change in state of delivery, the pullback, I missed that, but then entered here. This was a candle I entered in 740, and then price just fell through the floor. After that, heading into the 8 o'clock candle. My exit was for here on a bigger range, though a larger target would have been here. But I did not hold for that. I believe it's going to go there anyway for tomorrow. But let's see, we have NFP tomorrow, and let's see how that plays out. But I believe that's the major target for gold right now. If we look back at the daily, I have a cold, so I really do sound awful at the moment. But yeah, that low is a good target as well as these. There's an order block here that is also a good draw on liquidity. All right, so long wick left there. The wick itself can be seen as liquidity to come further into the order block. And then again, we still don't know how far down gold will go. I don't expect it to go too far though, but as it stands, we're still bearish right now. So, yeah, that was my thinking and how I decided to take the trade. It was in and out quite quickly, and everybody was going heavers, jeevers about the indices as well. And I believe that was also clear in my mind as to what was happening. So, um, but I didn't take a trade there, so I'll just leave that alone. I hope you find some gems in what has been said here today. And of course, if you have any questions or want to chat, there's a Telegram group, the Facebook group, and of course, you can message me on Telegram or even here on Facebook, on YouTube, sorry. And I'll be sure to answer your questions and help in whatever way I can. It's been a good month so far, though. The setups were quite clear up until the war began. So, a part of how the markets are, we just have to find our way through and stick to our own plans, right? Stick to our system, and if you're able to apply what you know well, then you should be fine. Apply good risk management so you don't blow your accounts, and you should be good. And stay out when the market says stay out. If there's nothing there to do, stay away. All right, have a blessed rest of your day, and we'll talk again soon. Take care. Bye bye.